Good afternoon, one and all, and a warm welcome. First of all, we DGTS BZU express our heartfelt sympathy towards the natural disaster that had happened in Wayanad, Kerala. Our heartfelt condolences to the bereaved families. Directorate General of Taxpayer Services, DGTS CBIC Bengaluru Zonal Unit, has always been in the forefront in taking the important policy framework of the Government of India, Ministry of Finance, directly to the taxpayer doorstep. Today also we are conducting a webinar for the benefit of the taxpayers. The Directorate General of Taxpayer Services, Bengaluru Zonal Unit, in association with Federation of Indian Export Organization, FIEO Southern Region, Federation of Karnataka Chambers of Commerce and Industry, FKCCI Bengaluru, Association of Tax Practitioners, ATP Kerala, Cochin Chamber of Commerce and Industry, CCC and I Kerala, Kerala Exporters Forum, KEF Kerala, Bangalore Customers Agents Association Limited, BCHAL Bangalore. Invites you all to this webinar on the topic recent budgetary changes in GST and customs and overview. For the presentation of the program, we have with us highly talented faculty from our department. Also, to make the question and answer session more effective, we have senior and experienced officers of CGST Commissionerate. Before we start the program, I have some important announcement. Microphones of all the participants are muted to avoid in-between disturbances during webinar. At the end of the program, we have a question and answer session, which will be attended by our expert panelists. So I request all the audience to upload their queries in the chat box, which is open now, and the same will be noted and passed on to our expert panelists. The questions should be confined only to today's topic. The questions other than today's topic will not be entertained. I repeat, the questions should be confined only to today's topic. Further, in case of any queries, clarifications, taxpayers are requested to contact our GST Seva Kendra officers in the numbers for Karnataka 08022866812, 08022864105. For Kerala 04842394 Now for the welcome address, we have with us Sri R. Manogar IRS, Additional Director General DGTS Bengaluru Zonal Unit, and our request Sri Manogar sir to welcome the gathering. Sir, over to you, sir.
Yes, sir. Am I audible?
Yes, sir, you are audible.
Yeah, okay. Yeah, very good afternoon to one and all. Yeah, heart-wrenching natural disaster which had happened in Wayanad. On behalf of the DGTS. Respected Chief Commissioner of CGST in Customs, Thiruvananthapuram Zone, Sri Manoj Kumar Arora, Sri Unnikrishnan, Joint Director General, PO Southern Region, Sri Ramesh Chandra Lahoti, President FKCCI, Sri Prakash Iyer, Managing Committee Member, CCC and I Kerala, Sri Munshi Dali, Secretary KEF, Girish Narayan, Honorable Secretary, BCHAL, Sri Babu Ganesh, State General Secretary ATP. The topic speaker, Sri R. Srivatsan, expert panelist, Srimati Rachna, distinguished members of the trade, dear colleagues, and all the participants. I stand privileged and honored to extend a warm welcome to this webinar. I profoundly appreciate the unconditional support and the cooperation extended by Federation of Indian Export Organization Southern Region, Federation of Karnataka Chambers of Commerce and Industry, Bengaluru, Association of Tax Practitioners, Kerala, Cochin Chamber of Commerce and Industry, Kerala, Kerala Exporters Forum, Kerala, Bangalore Customers Agents Associations Limited, Bengaluru, in materializing this webinar. These associations have played a pivotal role in accelerating the growth of industries in India. Their role in stimulating, shaping, and scaling up Indian economy is undisputable. As you all aware, the Directorate General of Taxpayer Services has been set up with a mandate to reach out to the taxpayers to create awareness and clarify the doubts arise in following the new procedures. The Bengaluru Zonal Unit caters to the need of Karnataka and Kerala. Several need-based webinars have been organized in the past after taking inputs from the taxpayers and the trade associations. Today's webinar is also one such. Budget is an annual exercise. Though it is presented every year, the word budget creates an understandable curiosity, anxiety, expectation, hopes among every citizens of this country. We as a tax administrator and you as a taxpayer would like to know the budgetary changes which has impact on the compliance level, tax compliance level. A comprehensive presentation about the budgetary changes will be made shortly by our Shri R. Srivatsan, Assistant Director, NACE in Chennai. He is a fabulous trainer, has a rich and wide knowledge on the topic. I am sure that this session will be enriching and would clarify all your doubts. I request all the participants to make best use of this session. With these words, I once again welcome you all to this webinar. Thank you. Over to you, Nathan.
Thank you, sir, for your warm welcome. Now, to inaugurate this webinar program, we have Sri Manoj Kumar Arora, IRS, Chief Commissioner of CGST and Customs, Thiruvananthapuram Zone. I request sir to kindly address the gathering with the inaugural address. Sir, over to you, sir.
Worthy members of the business community represented by the chambers from Karnataka and Kerala, our stakeholder groups, custom broker associations, ladies and gentlemen, a very good afternoon to you. Kerala has been struck with a tragedy of unprecedented nature and proportion, with tragic loss of many lives and loss of property. Yesterday, I had made an appeal to my officers as well as our stakeholders to make contributions to a special fund that we have created for this purpose in Kerala GST and Customs Zone. Kerala Zone had also undertaken relief operations during the last flood situation in 2018. We plan to undertake long-term relief operations for the affected areas of Wayanad district. I would like to reiterate my appeal to the stakeholders to make contributions so that we are in a position to create some long-term community assets for the affected people. The officers and staff from the respective jurisdictions in Kerala will be getting in touch with you for this purpose. DGTS has been doing a great service by organizing webinars on a regular basis, and the feedback which I get from the stakeholders as well as practitioners and individual taxpayers is that these webinars are very useful, and since they come at a time when there is a need for these webinars, these topical subjects to be discussed, the utility of these webinars is even higher. Budget traditionally has been an exercise for the government to allocate available funds to different objects, whether the social objects, economic purposes, or infrastructure creation. Over a period of time, the budget exercise has also become a major opportunity for the taxpayer, for the tax administrators to look at the tax structure, make minor course corrections wherever required, and sometimes announce path-breaking decisions which determine the future course of how the tax structure will evolve. We are very happy that this webinar is being organized just after Honorable Finance Minister has presented the budget and the Parliament is still discussing the same before the point of approval of the budget comes. I congratulate the officers of DGTS for having undertaken this in a very timely and organized manner. We will listen to the experts. All questions, all queries will be attempted to be resolved. I thank the industry chambers and our stakeholder organizations for joining us in this endeavor. And I'm sure once again, the webinar will be found extremely useful. Thank you.
Thank you, sir, for your warm inaugural address. The role played by the trade and industry in the nation's growth has always been commendable. In today's program, as I have already mentioned, there are a number of dignitaries representing the trade bodies, and it is our privilege to hear from them. I want to request, the topic is very important and interesting one. The topic speaker need more time to cover the entire topic. So I request the trade representatives to take 2 to 3 minutes for their guest speech to give more time to the topic speaker. Thank you, sir. Now we have with us Sri Unnikrishnan K, Joint Director General, FIEO, Southern Region. I request Sri Unnikrishnan to address the gathering. Sir, over to you, sir.
Thank you. Our heart goes out to all affected families in the natural calamity at Wayanad. Very good afternoon to all. Shri Manoj Kumar Araji, Chief Commissioner, CGST and Customs. Shri R. Manohar, Additional DG, DGTS. Shri R. Srivatsan, Assistant Director Nasin, and Srimati Rachna, Joint Director DGTS. Shri Ramesh Chandra Lahotiji, President FKCC, and other dignitaries from trade associations, department officials, ladies and gentlemen. At the outset, let me congratulate Shri Manoharji and his team for organizing this very important and useful program, particularly focusing on union budget impact in custom and GST. The budget announced during last week talked about reduction in custom duties on some products with focus on sectoral growth and also simplification of rules for utilization of FTAs, which are very important policy measures. It is overdue, especially in the context of the need for reduction in average MFN tariff, especially for manufacturing sector inputs. Global trade is going through a very difficult time, irrespective of that, Indian exports have been resilient despite many shocks emanating from pandemic, ongoing Russia-Ukraine war, Israel-Hamas war, imposing non-tariff barriers in our major markets, and including carbon border adjustment mechanism, CBAM, by European Union, US, China trade war, etc. All these events led to fluctuation in growth rates globally, especially related to trade. Irrespective of that, India is first quarter export, which it has picked up. Going forward, for reaching the target of 2 trillion exports, India needs to be part of global value chain, and hence these initiatives announced in the budget will help the country to gain more share in the global manufacturing. In this context, it is imperative that move towards more open trade policy announced in the budget need to continue and to be more broadened and deepened in the coming years. Budget also announced comprehensive review of custom duty structure over the next 6 months. It is very interesting to note that the government is now not seeing custom duty as a revenue raising instrument. It is well accepted that only trade openness can help India to become part of a key global supply chain. In India, non-tariff barriers are very high, which is hindering cost of inputs needed for manufacturing. According to WTO data released during first month of 2024, India ranks second in this regard. India imposed anti-dumping measures and duties, especially on 14 items during 2023, which were and earlier altogether we were having around 175 plus products under anti-dumping duty. It is hope that review of custom tariff, which has been announced in the budget, will make significant move towards cutting tariffs across the board. The focus of implementation and easy on doing business, along with the focusing MSME, agriculture sector, skilling, etc., will help industry to grow further. I'm sure that today's presentation will enlighten us on major changes and policy initiative with regard to customs and GST. And I look forward for the presentation from subject experts. I request participants to utilize this forum for gaining knowledge and also seek clarification. Let me conclude, and with this, I thank Shri Manohar ji and his team for providing you this opportunity. Over to you, sir. Thank you.
Thank you, sir. We have with us Sri Ramesh Chandra Lagoti, President, FKCCI, Bengaluru. I request Sri Ramesh Chandra Lagoti, sir, to address the gathering. Sir, over to you, sir.
Good afternoon to all. Sri R. Manohar, IRS Additional Director, General Director of Taxpayer Services, Bengaluru Zonal Unit, Mr. Manoj G. Arora, Chief Commissioner, other senior officials of the CGST Department, distinguished speakers, guest speakers, and friends from the tax fraternity. Congratulations to CGST Department, Bengaluru, for organizing today's webinar to educate and give awareness on the 53rd GST Council meeting. The 53rd GST Council meeting held on 22nd June made various recommendations to address issues which were more prone to litigations and to streamline the procedures. Thank you for the learned speakers for sharing their knowledge on GST issues. FKCCI is a state forum representing trade, service, commerce. It is always considered as partners in the progress of GST economic development of the country and Karnataka by CGST and SGST. Various issues represented by FKCCI were addressed in the council meeting, like amnesty scheme in the penalty ITC under section 16/4, etc., which has been favorably considered. This meeting consists of rationalized budget amendments, including few recommendations made based on various judicial pronouncements. This meeting will also remove the hindrance for seamless operation, I hope, from the business across the country. Thank you, sir. Thank you.
Thank you. Thank you, sir.
Thank you.
We have with us Sri Prakash Iyer, Managing Committee Member, CCC and I, Kerala. I request Sri Prakash Iyer, sir, to address the gathering. Sir, over to you.
Good afternoon, sir.
Good afternoon,
Mr. Abhinandan sir, Mr. Manohar ji, and Mr. Manoj Kumar Arora sir, and my other speakers. As in the beginning itself, we spoke about the calamity which happened in Wayanad. So there are little issues about the participants because most of them are either not in office, or most of the schools and colleges are closed in Kerala. So there is a little lesser participation, but I congratulate DGTS for taking up this matters for past 7-8 months now. And this first time, I think we are doing budgetary changes, GST. Mostly the chambers used to do this. And thank you very much for holding this. I don't want to take much of your time because there are many speakers and participants waiting to hear from you. And let it be more crispy. And I'd like to thank Mr. Manoj Kumar Arora sir for highlighting the requirements, the need of the hour to support through the Chief Minister Distress Release Fund or any other measures to support our friends and families in at Wayanad. Thank you very much. Over to you, sir.
Thank you, sir. We have with us Sri Munshid Ali, Secretary, KEF Kerala. I request Sri Munshid Ali to address the gathering. Sir, over to you.
Yeah, good afternoon to you all.
Good afternoon, sir. Yeah, you are audible, sir. You are audible.
Actually, I'm from just 20-30 kilometers away from the landslip area of Wayanad. So most of our members
Sir, you are not audible. Already he informed, he is staying near to the Wayanad, his connectivity is having some issue. So now I will move on to the next. We also have with us Sri Girish Narayan, Honorable Secretary, BCHAL. I request Sri Girish to address the gathering.
Thank you, sir. Good afternoon to one and all. Firstly, we wish to convey our condolences to the families endangered by the natural disaster at Wayanad. It's a heart-rending thing. So hope God is there and everything should be back to normal and we should bounce back. Kerala should bounce back to normal in the coming days. Our respectful Chief Commissioner, CGST and Customs, Thiruvananthapuram Zone, Shri Manoj Kumar Arora, sir. Our respectful Additional Director General, DGTS Bengaluru Zone, Shri R. Manohar, sir. My fellow guest speakers, Sumi Krishnan, sir, Ramesh Chandra Lavatiya, Prakash Ayarji, Munshi Ali, and topic speakers, Shri respectful Shri R. Srivatsan, sir, Assistant Director Nasin, respectful Srimati Rachna IRS, Joint Director, DGTS Bangalore Zone. Thank you to the DGTS for organizing this webinar. And it will be a very useful one, and I hope everyone across here will be utilizing this one. And time and again, we have DGTS has been doing such programs, significant programs for the benefit of the trade, and we are very happy that we warmly welcome and appreciate the efforts taken by DGTS for on the budgetary changes proposed across. At least to state a few things, that's all. During the budget are proposed by our Honorable Prime Minister or Finance Minister, it indicates that India has recently made a lot of changes to its import duties on specific items, and which is a move aimed at enhancing the local manufacturing activities. So our FM has proposed a slew of reforms on the removal of the duties on various items, and I think our experts panels will definitely dwell on the same thing. And even on the GST.
Mr. Girish, you seem to have been muted.
Sorry, ma'am. Sorry. On the GST front also, our FM has covered a wide array of topics from fiscal policies to new reforms. And as a custom broker and as an extended arm of customs, we foresee the thrust provided for the manufacturing sector from our finance minister level and the ministry level. And I hope our experts panelists and our expert speakers will definitely throw more light on that one. I thank Shri Ebenezer sir, Manohar Sarji, and DGTS Zone and all the officers concerned for providing us an opportunity. Thank you, sir. Hope this will be a very useful one and everybody should utilize on the same thing. Thank you, sir.
Thank you, Grishji. Now we come to the main part of the program, and we are honored and privileged to have with us Sri R. Srivatsan IRS, Assistant Director, Nasin, Chennai. He has a depth of knowledge in all the subjects of GST and customs. He has been very kind enough to accept our request and readily agreed to do the presentation. Now I request Sri Srivatsanji to start his presentation. Sir, over to you, sir.
Yeah. So thank you very much, sir. I hope I'm audible to everybody.
Yeah, you are audible, sir. You are audible.
Yeah, thank you very much for that confirmation. And on my part also, I would like to express my grief and condolences to all the affected families in the Wayanad for this natural disaster. Our prayers are always with them. And I hope the situation comes back to normalcy as soon as possible. Second, I would like to praise my gratitude to the Additional Director General DGTS Chennai, as well as Additional Director General Nasin Chennai for having provided me this opportunity and permitted me to do this presentation. I hope I will do justice and stand by the confidence that they have reposed on me. I will be talking about the changes that has happened with reference to GST, as well as the changes that has happened with reference to customs in this presentation. I will share a small presentation which I have made so that the session becomes a little more interesting and visually appealing. So this is the presentation I would like to make. And this presentation will have an analysis of the Finance Act 2024, especially with reference to the changes that are proposed under the GST Act as well as under the Customs Act. So I'll be talking to you about the proposed changes in the legislation, clarifications that have been given through circulars as far as GST is concerned. I'll also talk to you about the rate changes that has been proposed in the budget as far as the customs are concerned and the trade facilitation measures that are extended. I hope all of you will remember that this Finance Bill 2024 was part of the budget exercise that was presented by the Honorable Finance Minister on 23rd of July 2024. So let me go into the GST topics first. There was a lot of difficulty with reference to levy of extra neutral alcohol, which is one of the main ingredients in the manufacture of alcoholic liquor intended for human consumption, whether it is liable for tax or not. It has been recommended to amend Section 9 of the CGST Act to ensure that this extra neutral alcohol, which is the main raw material for manufacturing alcoholic liquor intended for human consumption, outside the levy of GST. So ENA, in fact, which is used for industrial or medicinal purpose, will continue to attract GST. But if it is used for manufacturing of alcoholic liquor intended for human consumption, it is kept outside the ambit of GST and it is treated as non-GST supply. So this confusion had come because of the fact that is extra neutral alcohol being supplied to the alcohol liquor manufacturers for the alcohol for human consumption was treated, or no, it was disputed in a sense that it is also an industrial supply and therefore it should attract 18%. This difficulty has been laid to rest now. If it is supplied for manufacture of alcohol liquor intended for human consumption, it is kept outside the ambit of GST. But if it is for any other industrial use or medicinal use, it shall continue to attract 18%. So this is the first. I'll go section wise, and that is why I chose this commodity as my first slide, because it makes an amendment to Section 9 of the CGST Act. Second is there is a proposal to introduce a new section called Section 11 to regularize non-levy short levy of central taxes due to general practice and prevalent trade practices. There are a lot of instances where certain taxpayers were following general practices prevalent in the trade and have failed to either pay GST or probably underpay GST on specific supplies. A few examples for that are like the corporate guarantee, where there was a circular that was issued how to evaluate this corporate guarantee and how to levy tax on that. There are still certain ambiguities with reference to levy of tax on online gaming. And we also have certain difficulties with reference to interpretation of liability of tax on employee secondment. So all these are generally the trade practices that whatever is the existing general practice that is prevalent, they use that for assessing their tax liabilities. But with the introduction of Section 11A, probably all these difficulties will be regularized by the government. And Section 11A will propose as is various basis that is necessary for the past period also, because with the new tax position, the taxpayers will not be in a position to collect the differential tax from their customers, and therefore it will be applied prospectively. So this is a very, very important and a very welcome move as far as the industry is concerned. This is a very pragmatic and business friendly measure as far as the GST regime is concerned. I think probably we can also add to the list about the services that are received by the Indian companies with reference to their foreign overseas branches, which in fact was a talk of the town for the past 2 or 3 days. Probably that dispute can also be added as part of Section 11's playing field. Third is about Section 16 of the CGST Act. There is a proposal to insert 2 subsections after Section 16.4 and 16.6, which speaks about the time limit prescribed for availing input tax credit with reference to invoices, debit notes that was raised in the preceding financial year. For instance, the time limit that is generally prescribed for taking input tax credit, especially those which pertains to the preceding financial year, was initially prescribed as the last date for filing GSTR 3B return for the month of September. But the this factor of linking the filing of return for fixing the last date for taking credit, especially with reference to the preceding financial year, was delinked from the year 22-23 and 23-24, and it was fixed as last date was fixed as 30th of November of the subsequent financial year. So this benefit was not available for all those taxpayers who missed by a whisker. Probably, they could not take credit during that time. So for the financial years 2017-18, 18-19, 19-20, and 2021, the same benefit has been extended for that period also. And the last date may be deemed as 30th of November 2021. So if somebody has taken credit after filing the return for the month of September of the subsequent year, but before 30th of November 2021, they will not be treated as ineligible credits. They will be allowed as credits as if they have been taken in time. So this again is a very, very important trade facilitation measure that has been extended, so that the taxpayers who are otherwise eligible for the input tax credit are not bereft or denied their due vested by the legislation, and they can take credit on such input taxes. The second benefit, there was a lot of discussions and confusions with reference to availment of credit, especially on those registration certificates which are cancelled or which were subsequently revoked, and what happened to the period during this cancellation, subsequent revocation, that temporary period, whether if the returns are filed, whether the taxes can be taken as input tax credit or not. It has been clarified or proposed to be amended to say that the registered persons, if they file the returns within 30 days from the order of revocation, whatever tax has been paid will be eligible for input tax credit. So this is again another very important trade-friendly measure that has been initiated as part of the budget recommendation. Fourth, very important, I think this has been one of the topics which has been discussed for quite some time, a common time limit for demand notices. Two difficulties were there, that every investigation or every demand, either section 73 or section 74, the authorities as well as the taxpayers were always running against time, and there were a limited time period for issuance of notice. For instance, for a normal show cause notice under section 73, the total time period was to complete the process of adjudication was 36 months. That is, the notice should be issued within 33 months and the adjudication order shall be issued before expiry of 36 months. Similarly, under section 74, where it is treated as fraud cases, the maximum time limit that was available is 60 days, while the show cause notices should be issued within 54 months from the date of filing the annual return. So the time gap that was available for issuance of notice and adjudication was that window was very short. In fact, only 3 months as far as section 73 is concerned, and it was only 6 months as far as the fraud cases were concerned. And there were a lot of litigations whether a notice has to be issued under 73 or 74, depending on the nature of claim, and a lot of litigations were triggered. So the GST Council recommended to insert a new provision, that is section 74A, to prescribe a common time limit for issuance of demand notices, irrespective of the nature of crime, if I can say so, nature of dispute. So there will not be any distinction between a normal show cause notice and a show cause notice which invokes the extended period under section 74. So whether the charges are fraud, suppression, willful misstatement, or etc., they were actually causing a lot of practical difficulties, and therefore a common time limit has been proposed under section 74A. So this recommendation will come into force after the finance bill receives the assent of the president, and subsequently section 74A is notified. One of the recommendations as part of section 74 is that such provisions will start taking effect only for the financial year 2024 and 24-25, and not for the previous period. Second very important advantage as far as section 74A is concerned is that we know in terms of section 17(5), that is, which speaks about block credit under clause I, if any tax is paid on account of the notice issued under section 74, 129 or 130, where an element of fraud or guilty mind is established, in spite of the fact that the tax has been paid, they become ineligible for taking input tax credit. But now, if a notice is issued under Section 74A, such ineligibility criteria will not be there, and any taxpayer who pays the dues will be eligible for taking credit at his customer's end. So again, that will incentivize voluntary payment of taxes, so that the credit can be passed on to the recipient of supply and the litigations will come down. Second, as part of this reforms, it has also been recommended that the time limit for availing the benefit of reduced penalty has been increased from 30 days to 60 days, so that even if somebody is not able to pay up the tax dues along with interest and any penalty, or if at all it is there, if they pay it within 60 days, probably this the penalty is reduced for them. So this benefit is also extended as part of Section 74A. What I have done is I have tried to create a chart so that it becomes much easier for everyone to understand the distinction between the period where Section 73 and 74 were there, and the period where 74A will take its position as far as the adjudication process is concerned. So if you can see here, up to the period 23-24, it is only Section 74 or Section 73 which will determine when a show cause notice should be issued, when an order should be issued, and when the finalization about the adjudication process should be completed. But after this law is promulgated and after Section 74A is notified, so for the year 2024-25, it shall always be 42 months from the date of filing the annual return, which generally is the 31st of December of the subsequent financial year, and the date of adjudication in terms of subsection 7 of Section 74A is 12 months from the date of issuance of show cause notice. Again, this finalization or issuing an order in original has been delinked from the date of annual return, but linked to the date of issuance of show cause notice. So if a show cause notice is issued after 40 months of the filing of the annual return, you will have only about 12 months from that, which means that the order shall be issued within 52 months from the date of annual return. So the date of issuance of show cause notice is linked for the purpose of determining the date on which the order in original shall be passed finally. So 12 months time has been given, and there is also a discretionary power that has been vested with the commissioner or any officer that he delegates that work to do, provided that officer is superior to the adjudicating authority. The timeline of 12 months can be extended by a period of another 6 months. So this is a facility. This is under an extraordinary situation where if the order could not be passed within 12 months from the date of issuance of show cause notice, it can be extended by a period of another 6 months, which means the entire spectrum of 60 months has still been retained, but within the 60-month period, there are certain allowances that are extended, especially with reference to issuance of show cause notice and the timeline between issuance of show cause notice to the issuance of order original. So this flexibility probably will help in giving a qualitative order in original, so that the principles of natural justice are followed properly, and the interpretation with reference to the legislation are done with due merits as it was legislated. So that is the intent behind probably having this new provision of Section 74A, which prescribes a common time limit irrespective of the nature of offense. Next very important trade-friendly measure as far as GST is concerned is regarding pre-deposits. So any appeal that has to be made, a pre-deposit has been made mandatory, as in fact is part of the legislation, and therefore in case somebody wants to file an appeal, they cannot file an appeal without without making a pre-deposit. So the amount of pre-deposit that is expected or prescribed by the legislation is 10% of the disputed amount, subject to a maximum of 25 crores each under the CGST Act and SGST Act, which means it shall be 10% of the disputed amount under each act, plus a maximum of 50 crores that will have to be deposited. Now this has been reduced. 10% has been retained. There is no change as far as 10% is concerned, but this maximum limit has been reduced from 25 crores to 20 crore, which means under CGST and SGST Act, cumulatively, a person who wants to make an appeal need not execute a pre-deposit of more than 40 crore instead of 50 crore, which was there earlier. This is with reference to the first appellate authority, where the appeal is filed with Commissioner Appeals Office. Second appeal lies with the GST Tribunal, which is likely to be formed very shortly. And this, as per the existing provision, the percentage of pre-deposit that will have to be made is 20% of the disputed amount, and that is in addition to the amount paid before the appellate authority, but subject to a maximum of 50 crore under CGST Act and SGST Act, which means it shall either be 20% of the disputed amount or 100 crore cumulatively for CGST and SGST. This has been radically reduced now. Now it has been prescribed or proposed to be amended. And the pre-deposit shall be 10% of the disputed amount. And again, that is in addition to the amount that is already paid with the first appellate authority. But the very important thing is the maximum amount is 20 crore under CGST and SGST Act separately, which means from the earlier maximum cap of 100 crore, it has been reduced to a maximum cap of 40 crore. That will in fact be very beneficial to the taxpayer. This will come after the amendment of Section 107 and 112 of the CGST Act. The best part of it is that it will definitely ease the cash flow and working capital blockage for the taxpayers who intend to go on appeal and follow the process of dispute resolution mechanism as provided by the GST law. So this again is a very trade-friendly measure that has been extended that will help the industries to thrive and seek justice. The other aspect is with reference to timeline for filing appeal with GSTAT. We know that there is a good progress as far as formation of GST Appellate Tribunal is concerned. The president of the GSTAT has been appointed and he has assumed office on 6th of May 2024. And as per the existing provisions, the timeline for filing the appeals before the GSTAT is 3 months from the date on which 3 months from the date on which the order is communicated from the date of appointment of the president. And therefore, this timeline probably would have expired on 5th of August 2024 because the president assumed office on 6th of May 2024, and therefore this 3 months period would have expired on 5th of August 2024. But now the recommendation has been made by the GST Council, which in fact has been made part of the Finance Bill 2024 to amend the provisions of Section 112, which shall allow a 3 months period for filing appeal before the appellate authority from the date to be notified by the government. So government will notify a particular date after establishing the administrative setup of GSTAT, both the principal bench as well as the regional benches that have been notified. Once these benches are formed, government will notify a particular date from within 3 months of that notified date, all these appeals shall be filed. So this is again a very important requirement or very important clarification that was sought by the trade and industry, so that their apprehension regarding the time limits for filing GSTAT has now been clarified very clearly. The next very important topic is the topic of waiver of interest and penalty for certain demands. 53rd GST Council meeting made a recommendation to insert a new provision called Section 128A to provide waiver of interest and penalties for demand orders issued under Section 73. And this benefit will accrue only if the taxpayer pays full tax demand by 31st of March 2025. And this probably, if I can call it so, the amnesty scheme for waiver of interest and penalty shall be applicable only for disputes with reference to the year 2017-18, 18-19, and 19-20. But this scheme will not be applicable for cases where the notice has been issued for erroneous refund. Probably one will know the fact that Section 128 gives powers for the government to waive penalty and late fee, etc., or both, whereas there is no power for the government to waive interest. So waiver of interest is because no interest is a civil liability. If one can recollect, the dispute was finally laid to rest by the Honorable Supreme Court of India in the case of Rajasthan Spinners versus Union of India, where they said that interest is a civil liability, whether demanded or not, it shall accrue once the tax demand is accepted and paid. So, we had all these clarifications earlier, but we did not have power to waive this interest liability, which is a civil liability. So now this introduction of section 128A would provide powers for the government to waive interest also. But the only factor that we will have to take into account is that no refund of amount paid towards interest and penalty for the preceding years on the demands raised will be given as refund subsequently. So refund will not be there for all those who have already paid voluntarily earlier, but all those who have not paid will be waived with this interest liability. The other very important, four very critical points as far as the section 128A is concerned is that it shall be applicable only for the notices that are issued under section 73 where no fraud is involved. It shall be a normal show cause notice, and it shall be only for the period from 2017-18, 18-19 and 19-20. And probably most of us will be aware of the fact that the timelines for issuance of show cause notice for the year 2018-19, 19-20, as well as the timelines for adjudication and completion of orders in original have all been expired, and therefore they're all in the stages of orders in original. There is no question of show cause notice to be issued for these 2 years under section 73 anymore. The time limits have already expired. And as far as the financial year 2019-20 is concerned, the timeline for issuing of show cause notice was extended up to 31st of May 2024, and the revised date for issuance of order under section 7310 has been fixed at 31st of August 2024. So all these cases will be covered under the new section 128A, provided the taxpayer pays the demanded amount as determined by the proper officer, either in the show cause notice or in the order original before 31st of March 2025. So this is in essence the crux of the benefit that is extended by the new section 128A. Section 128A also has got certain limitations with it, like if the taxpayer has paid tax on his own volition, without being coerced or on being persuaded, under his own volition, he pays the taxes, but he has refrained from not paying the interest. There is no necessity for issuance of show cause notice at present, because under the Central Excise Act 1944, in terms of section 11A subsection 15, there was a power for warranting to issue a demand notice with reference to the interest that accrues on account of the tax short paid or not paid or short levied. However, there is no such provision as far as the GST law is concerned, because interest has now become a civil liability consequent upon accepting the tax liability. So in such cases, no notice would have been issued. So whether in the absence of notice issued under section 73, because the first condition for getting benefit under this new provision of section 128A is that there should be a notice under section 73. So in the absence of any notice for interest, whether such taxpayer will be eligible for section 128A benefit or not is something which is debatable. And whether it is part of the ambit of 128A is again debatable. Second debatable point with reference to section 128A is that the department would have issued notice under section 74, but subsequently, the test of judicial scrutiny, it would have failed section 74, and therefore, they would have adjudicated it within the timelines that are eligible under section 73. So in such cases, again, the orders would have been issued under section 73 period, whereas the notice would have been issued under section 74. Whether such conflicts will be covered under this benefit scheme that is extended by the government or not is something which requires to be seen once the notification for section 128A is issued. So these are some of the small disputes that might occur after the promulgation of section 128A or not, but generally it will definitely benefit all those taxpayers who have not paid interest in spite of the fact that they have paid taxes, or they have not paid taxes at the appropriate time, the interest liability will be waived under section 128A. So this is in fact a beneficial scheme, so that it helps the taxpayers as well as the tax officers to move forward, leaving behind the litigations that were otherwise would have gone up to the highest judicial forum. The next very important trade-friendly measure is about the eligibility of transitional credit by an input service distributor. So all the at the time of transition from the earlier tax regime to GST, most of the tax that was available in the earlier tax regime was allowed to be transited into the GST regime. But in case of ISD, in case the services were pertaining to the period before the appointed date of 1st of July 2017, and the invoices were also received by the input service distributor branches before the appointed day, there was some dispute whether it has to be allowed or not. But now it has been the provisions of section 140 subsection 7 has been amended to ensure that the ISD credit will be available for all those invoices which were received by ISD even prior to the appointed day, that is 1st of July 2017. This amendment has been made retrospectively from the appointed date, and therefore the dispute with reference to this from 1st of July 2017 also will be laid to rest. So this is an offshoot of a very important decision that was given by the Bombay High Court in the case of Siemens Healthcare Private Limited in the Red Petition 986 of 2019, and following the directions or the order of the Mumbai High Court, I think this beneficial trade-friendly amendment has been proposed as part of the budget on the basis of the recommendations of the 53rd GST Council meeting. The next very important topic is with reference to anti-profiteering mechanism. Currently, anti-profiteering mechanism decisions are taken by Competition Commission of India, and initially, it was handled by National Anti-Profiteering Authority. Subsequently, from 2020, this was transferred to the Competition Commission of India. But I think the Competition Commission of India have expressed their difficulty to handle these litigations, and therefore, it is now proposed to be back with the GSTAT once it is formed. So section 171, which deals with this provision, has been amended, and very importantly, to provide a sunset clause for anti-profiteering disputes under the GST Act. The Council has recommended to provide 1st of April 2025 to be the last date for receipt of any new application concerning with the anti-profiteering disputes or measures. And all the disputes or the notices that are required to be adjudicated will be handled, especially with reference to anti-profiteering cases, would be done by the principal bench of the GST Appellate Tribunal. So what is the offshoot of that? Any decision taken by the principal bench of GST Appellate Tribunal, the next appeal lies with the Supreme Court. So either it can be treated as a benefit or otherwise also, because if Supreme Court takes a final decision, that is the law of the land. Therefore, it short circuits any appeal that is required to be made to the High Court, because the final decision is taken by the principal bench of GSTAT. There are also certain disputes with reference to services provided by insurers and co-insurers. Now, the provisions of Schedule 3 of the CGST Act has been proposed to be amended, and the activity of apportionment of the co-insurance premium by the lead insurers to the co-insurers as part of the co-insurance agreement. The service by the insurers to the reinsurers will be treated as neither supply of goods nor supply of services, and therefore, it will eliminate the disputes with reference to the liabilities on the reinsurers or co-insurers. So the total liability will be on the principal insurer, and that again will help this insurance. This model can be extended to, in fact, to the banking sector also. Probably that could be a way forward. And the time limit for availing input tax credit on reverse charge mechanism. there are the first and foremost condition for availing input tax credit when the tax is levied under reverse charge mechanism is that the tax recipient shall raise a self-invoice based on which ITC can be availed. But there were situations earlier that the input tax credit would have been taken without issuance of self-invoice, or the taxpayer would have failed to raise a self-invoice and would have issued a self-invoice in the subsequent financial years. For instance, if there is a supply that has been made maybe in October 2017, which triggered a liability under the reverse charge mechanism, but the taxpayer has not raised a self-invoice but paid the tax at that time, or no, even he has not paid the tax at that time and he has not raised a self-invoice. The law has been amended now that if he raises a self-invoice now, along with the interest liabilities, of course, he will be eligible to take credit as far as the timelines are concerned will be with reference to the financial year in which the self-invoice is raised. This is a very big relief. Several disputes across the nation raised by the department as part during their audit and was audit objections. And this gives time for the taxpayers to ratify the genuine errors and otherwise the ITC which they are eligible for, provided the RCM liability along with interest is discharged by them. So this again is also a very important rate-friendly measure that has been taken. Some other measures, very important measures that are proposed is that to reduce the threshold limit for reporting B2C interstate supplies under Table 5. So it has been reduced from 2.5 lakhs to 1 lakh now. This probably will entail additional compliance, but this will give a lot of data for the department to do a data analytics, because B2C transactions are generally considered as risky transactions, and therefore reducing this will give a more micro level data for the department to undertake data analytics and fix the risk parameters and red flags. Another very important rate friendly measure is amendment to section rule 88B, which will exclude the amounts available in the electronic cash ledger on the due date from interest calculation. Again, this will reduce the financial burden on the taxpayers. See, for instance, if somebody is filing GST R3B belatedly, generally they are expected to file it on 20th of the subsequent month. But if they file it belatedly, probably on the 30th of subsequent month, generally the interest liability will accrue for them for the 10 days period. But if they have sufficient balance in their electronic cash ledger, probably the interest liability will not accrue on them, because it's generally felt that when taxes are paid, though it is in the electronic cash ledger of the taxpayer, is already deposited to the government, and therefore the interest liability will not be applicable in such cases after amendment of Rule 88B. And as I said, the time limit for claiming reduced penalty has been increased from 30 days to 60 days. Again, this gives an additional window of opportunities for the taxpayers to avail this benefit and then pay up the tax liabilities and then reduce litigations. Some of the services rendered by railways, again, they were attracting GST or attracting litigation in some point or other. Now it has been very categorically clarified that services provided by railways, especially this platform ticket, waiting room, clock rooms, retiring rooms, or even the battery operated cars that are provided as service in the platform, now they are all exempted. A notification has already been issued in this regard, so there will not be any GST liability on that. So the common man will be benefited by these activities. Section 11A, as I said, probably if it is introduced, probably it will reduce the litigations on taxes short paid, not paid, as a matter of general practice and common parlance. So that will be in line with what we already had as part of the Central Excise Act. The best practices are now extended here also. And Rule 62 has been amended to make 30th of June of the succeeding financial year as the last date for filing the return by composition office form GSTR 4A. GSTR 4 is the annual return that they will be expected to file. The last date was initially 30th of April. Now it has been extended to 30th of June. So which will again give them an additional window of another 3 months time. or at least 2 months' time. And TDS, every government authority who is deducting TDS under Section 51 will have to file a return called GSTR7. It was said that in case there is no TDS deducted for a particular month, there is no requirement for filing GSTR7. Now it has been made very clear that even if there is no invoice on which TDS is deducted, a nil return will have to be filed by such registered persons. Obviously, belated filing of nil returns will not attract any late fee. So that is the only concession, but it has been made mandatory to file a nil return even in cases where no TDS is there. And again, as accommodation, again for the accommodation services sector, an exemption has been given where accommodation services having a value of supply of more than 20,000 rupees per month per person, the exemption would be available where the accommodation services is provided for a minimum period of 90 continuous days. So this has been made applicable for past cases also. Notification also has been issued 4 of 2024 central tax rate. So this will again help the students who take accommodation or office going women probably who take a working women's hostel or something like that. That will help them in avoiding paying GST. So that will bring down their monthly liability. There is also something called GSTR 1A. I will not be in detail discussing about that because this was not something which was proposed as part of the Finance Bill 2024. But at the same time, it is one of the very important trade facilitation measure that has been extended. And I thought that every business entity should know that there is a facility that has been made available. And I think from 1st of August, this has been enabled in the GST portal also. In case you want to make any corrections with reference to GSTR1, which has already been filed, GSTR1A form permits the taxpayers to amend the GSTR1 within the specific period of time, right? So the mistakes can be on account of missed entries or wrong entries. So once the taxpayer files GSTR1A, that will automatically update the information in GSTR3B as well as in the GSTR2B, and that will facilitate both the supplier as well as the recipient of supply. So this effectively simplifies compliance mechanism and also promotes transparency and efficiency of the GST system, and this will be very, very helpful for the entire industry, because in the same month the liability will be discharged and therefore the interest question will not come. And also the recipient will be able to avail the input tax credit within the same tax period. So it is a win-win situation both for the supplier as well as for the recipient, and also for the tax officer when he goes for audit or any other investigation, the corrected information will be made available with him. Some of the rate cuts as far as the GST is concerned is that there is a uniform rate of 5% IGST available on parts and components which are used for MRO purposes, and all milk cans, irrespective of the material in which they are made, steel, iron or aluminum, will attract only 12%. Carton boxes, the rate of tax has been reduced from 18% to 12%. Solar cookers also will attract only 12%. Earlier they were attracting 18%. And also poultry keeping machinery, which was attracting 18% earlier, will attract 12%, and parts of poultry keeping machinery will also be attracting only 12%. So these are some of the rate reductions. Sprinklers, water sprinklers will also attract only 12%. There is an IGST exemption on imports of specified items for defense forces, which was there for up to 30th of June 2024. Now it has been extended up to 2029 for another period of 5 years. And compensation cess on imports, especially with reference to SEZ units, has been exempted. This was again a very important and disputed topic after the judgment delivered by Telangana High Court, which said that compensation cess is not part of Schedule 1 of the SEZ Act, and therefore no exemption will not be automatically accrued unless there is a specific exemption that is provided under the Compensation Cess Act. Now the exemption has been made available. And it has to be from 1st of July 2017, but the notification said that it is from 15th of July 2024. It said that the notification takes effect from 15th of July 2024. But as per the recommendation of the council, it is on retrospective basis from 1st of July 2017. Now coming to some of the changes in the customs law, section 28DA of the Customs Act, it has been amended to enable the acceptance of different types of proof of origin provided under the various free trade agreements. India has been entering into free trade agreements with a lot of countries to facilitate better trade activities and also for preferential rate of customs duties. So if a person need to avail these preferential rate of customs duties, a proof of country of origin is absolutely important in terms of section 28A. So in order to align with the such free trade agreements, a self-certification has been provided. So anybody who produces self-certification, which is mandated under section 28DA of the Customs Act 1962, will be eligible for preferential rate of customs duties. Second is customs tariff identification, assessment and collection of countervailing duties. Subsidized articles and determination of injury rules 1995 have been amended to insert a provision for new shipper review for the purpose of determining the individual margin of anti-dumping duty. So this again will take effect from 24th of July 2024. This will also help better facilities for exports from India. Then time period for duty-free re-import of goods has been increased from 3 years to 5 years and further extendable by again 2 years. A notification has already been issued. Notification 39 of 2024 customs has been issued, amending the earlier notification which was issued way back in the year 2017. So the timeline now is 5 years and that can be extended by another period of 2 years. Then aircrafts and vessels imported for maintenance and repair can now be re-exported within a period of 1 year. This timeline was 6 months earlier. Now an additional 6 months has been provided. And there is also a discretionary provision for extending it by a period of another 1 year. So this extended timelines will help the industries to re-export the aircrafts and vessels which are brought for repair and reconditioning. So notification 38 of 2024 has already been issued, which amends the earlier notification issued, parent notification which was issued as early as way back in the year 1994. Apart from these very important changes in the customs legislation, there are a lot of rate reduction that has happened also. So mobile phones, mobile chargers, all those items earlier were attracting 20%. Now it has been reduced to 15%. That will give a smile on everybody's face, because without mobile phones, probably life has become very difficult for us. So imported mobile phones will be costing less, and of course the chargers also. Then gold and silver. Earlier it was 15%. Now it has been reduced to 6%. Platinum 15.4 to 6.4. Again, there is a reduction in the rate of tax. Then broodstock, then shrimp and fish feed, etc. They were attracting a range of 10, 15 and 30% respectively. Now it has been reduced and kept at a common rate of 5%. Alkaline earth metals, and then 25 rare earth materials like lithium, which are used for batteries for electronic vehicles. They were attracting 5%. Now they have been exempted completely. Capital goods that are imported for manufacturing solar panels, earlier they were attracting 7.5%. Now they have been exempted. Some very important life-saving cancer drugs were attracting 10%. Now they have been exempted. Then ferronickel and blister copper, it was attracting 2.5%. Now nil BCD has been prescribed under the tariff. And there are certain items where there is a slight increase in the rate of tax also, just to make it align with the domestic tariff rates, as with the just to factor in the domestic manufacturers and ensure their safety. Ammonium nitrate, PVC flex banners, and then certain telecom equipments also, there is a slight increase in the rate of tax to 10%, 25%, and 15%. So these are the major changes. In fact, generally, the GST Council's meetings will be of great interest for both the tax officers as well as the traders with reference to changes in the GST. But probably this is one of the first time where the budget, in fact, has attracted a lot of attention with reference to changes in the GST law. And also the customs law. Customs law still, the changes are made through the finance bill every year as part of the budget exercise. But the unique aspect this year is that so many changes have been proposed in the GST legislation. So that is something now which probably because of the fact that the 53rd GST Council meeting and the budget 2024 happened at about the same time. So probably I think that is the reason why so many changes are proposed as part of the budget exercise. So these are the changes which happened as part of the budget exercise. I've explained you the proposed changes in the law, especially with reference to GST and also with reference to customs, changes in the process, rate increase or rate cuts, and then a few clarifications that were made through circulars consequent upon the recommendation of the 53rd GST Council meeting. So I would like to end my presentation here. Probably I feel that I have covered almost all the critical points as far as the budget exercise has been concerned, Finance Bill 2024. So I'll stop my presentation here and probably leave the dais for the expert panelist also to answer a few questions that are already available in the chat box, as well as the questions probably will come forthwith. Thank you very much. Again, my gratitudes to the Additional Director General, Taxpayer Services, as well as Nasin Chennai for providing me this opportunity and platform to make this presentation that will definitely help the taxpayers. Thank you very much.
Thank you, sir, for your detailed presentation. I am sure that majority of the doubts in the minds of our audience were cleared with the presentation. Now we will move on to the question and answer session. To proceed with question and answer session, along with our faculty, we have also invited Srimati Rachna, IRS, Joint Director, DGTS BZU. We thank you for your gracious presence on this occasion.
Oh.
Now let us look at the question in the chat box. Ma'am, we can see the question from the chat box, ma'am.
Thank you, Ebenezer ji.
Yeah,
I hope I'm audible. I've been answering
Yeah,
few
ma'am, you're audible,
questions in the chat itself. I believe there were thanks to the excellent presentation by Mr. Srivatsan, there were very few questions. The first question that we had received was with respect to section 128A. Vikas had asked that question, which basically was, before that there was whether any notification released on respect of waiver. I think that notification is yet to come. It will be notified once the act comes into existence. As of now, it is still in the bill format. The next question was by Vikas, who asked that clause C of section 128A1 mentions that an order passed by an appellate authority where no order by tribunal has been passed. There is no distinction between orders issued under section 73 or 74 under clause C. Does it mean that even if an order has been issued under section 74 and order has been passed by appellate authority in favor of department, then also the waiver of interest and penalty will be applicable? I had answered this. The proviso to that proposed section 128A answers. Please note that the precondition in that interest and penalty case is that the entire tax amount has already been paid. So I believe that if you are talking about an adjudicating authority's order where an order has already been confirmed, that means the party has gone in appeal. So they might not have paid that tax in the first place. So this might not be applicable. I hope that answers Vikas's question. I've answered it in the chat also in detail. Due date to file GSTR 7 is the 10th of the following month. So for, let's say for July, the GSTR 7 would need to be filed by 10th of August. Now it has been made mandatory, as Mr. Srivatsan had already mentioned in his presentation, this GSTR 7 TDS deductions, even if there is no deduction, nil return has to be filed monthly. And the due date is 10th of the following month. Vikas, I hope there was a follow-up question. I hope I've answered that. If not, please let me know. Please clarify whether interest is to be charged, penalty to be imposed on OIOs to be issued for FY 19-20 by 31st August 24. As if I'm not wrong, this is already included in that waiver. So 19-20 is also included. 17-18, 18-19, 19-20, and 20-21. So this should be a part. How to revoke the demand order for ITC disallowed under section 16.4 after council recommendation. For 16.4, this was a retrospective amendment, if I'm not wrong. I'm just checking the Finance Act. Kindly give me a minute. Mr. Srivatsan can join in.
Yes,
It's
yes.
a retrospective amendment.
Yes.
So I believe the mechanism would be given in the notification once it comes.
Yes, it is a retrospective amendment. The benefit will accrue, and as if the last date is 30th of November 2021. So it's a retrospective amendment for all the cases right from 2017-18.
Next question is changes in IGST rules, if any. The changes in rules are there by notification 12 of 2024. There are a number of changes that can be referred to. Rice more than 25 kg package and labeled as taxable or exempt. This was a amendment in terms of specified packed commodities. Less than 25 was, I believe, not considered as packed.
Yes.
Can we get okay, this is asking for a copy of presentation. Is there an import duty on second-hand capital good for units in SEZ? Let me check the customs notification once. The only change in this particular 53rd Council recommendation was with respect to exempting compensation cess on imports in SEZ by SEZ units or developers. So I don't think there is any specific exemption for any second-hand capital goods. There is no specific exemption that has been mentioned for second-hand capital goods. But I believe this is a generic question. No, this is not respect to this. Is there an import duty on second-hand capital goods for units in SEZ? So all the benefits of SEZ are applicable there itself also. There has been no change for this part. The only change that has been done in this year's second budget is with respect to compensation cess, not on import duty. Whether amnesty scheme will be applicable for notice issued under 74, but later it is held as notice under. I don't see why not. But again, the same point which I mentioned to Vikas would be applicable. If someone has gone into appeal, I believe they would not have paid the entire tax amount. They would have only paid the pre-deposit. Whereas for the waiver scheme, the prerequisite is that the entire tax demand has to be paid in full. So I don't is ruled as a 73 by appellate authority, but subject to the condition that the prerequisite of having paid the entire tax amount has to be fulfilled, which in my opinion, in general practice would not be the case if some party has gone for appeal. We have liability to pay RCM under import of services for the period 17-18. Can we claim ITC if we pay? No, this has been clarified specifically. The RCM aspect has been clarified specifically. It depends on whether the invoice has been issued on time or not, as per the regulations of section 32. amnesty scheme will be applicable for order passed on or before 31st March 2025. They have given specific financial years. So for as long as your order is for those financial years, it should be applicable. Subject to, again, please, I'm saying it at the cost of repetition, subject to the condition of the tax amount having been paid. I would like to understand if any specific changes for units in SEZ. As I mentioned, the specific change for SEZ is that compensation cess on imports in SEZ by SEZ unit or developers for authorized operations. This compensation cess has been exempted. Other than that, I don't think there are any specific changes only for SEZ. Yes. Another thing is that the council had recommended in the 53rd meeting amendment in section 16 of IGST Act and section 54 of CGST Act to provide that refund in respect of goods which are subjected to export duty will be restricted irrespective of whether the goods are exported without the payment of taxes or with the payment of taxes. So this restriction would also be applicable if such goods are supplied to a SEZ developer or a SEZ unit. So these are the two changes. If I've missed anything, Mr. Shivatsan can add. One is the exemption of compensation cess. The second is non-applicability of refund for those goods where IGST is where the export duty is there. So those restrictions will also apply in case of SEZs. What if taxpayer has already discharged tax, interest and penalties as per OIO pertaining to 16.4? Again, as per the recommendation, this is supposed to be a retrospective amendment, but let us look at the notification to say this for sure. I think there is again that question of branded and unbranded. Let me go back and read that particular provision. That will be helpful. This was in first rate notification, the rate notification amendment. Please give me a moment while I open that rate notification. The network is acting a little sketchy, so just give me a moment. I'm downloading that notification so that I can read out the exact thing. If it is 26 kg, 30 kg, it is more than 25, but let me go back and read that notification to confirm that. In this case, tax should be applicable. Sorry, more than 25 kgs, tax should not be applicable, but please give me a moment while I download the notification. Other than that, while I'm downloading, I'm sorry, my system is a little slow today. Yeah, central tax rate. Can the department raise a notice under section 74 even if the GSTN is cancelled? Yes, it can be done. Whether RCM credit against raising self-invoice can be availed against DRC3 when paid against notice. No, I believe there's a restriction. When this amount is paid after the notice, the input tax credit will not be available. Is there any change in bulk rice GST rate? There's no change in the rate. There is a change explanation. I'm trying to download that explanation. Kindly give me a moment.
ಫಸ್ಟ್ ಸೀಕ್ ಬಿಟ್ಟಿದ್ದಾರೆ ಆಮೇಲೆ ಇದು ಬೇಡ ಮಾಡೋಕೆ ಸರಿ ಓಕೆ
Please also clarify on passing orders for 1920 where tax has not been paid regarding imposition of interest and penalty. This again would follow the same things. Interest and penalty would be waived off. This has got nothing to do with passing of order. It is only after the demand has been paid that those interest and penalty would be waived off. Whether or not they are confirmed drop, if they're dropped, then the question of waiver does not come into picture at all. If they are confirmed, then that waiver condition would be would have to be met, and then this so the order will not be impacted by it. It is only the payment of interest and penalty once it is confirmed. Can we also claim IGST refund on courier shipments? Yes, technically it is feasible. SEZ developer is supplying services to an SEZ unit, which is a government entity. This is considered as a zero rated supplier. Supply to SEZ would be that from to an SEZ unit.
Both,
Yes.
both.
In this case, is there any requirement to deduct TDS under section 51 by government entity? If there is no tax, then what TDS are we discussing about? This again, it can be taken in two ways. See, zero rated can be you are effectively you are paying tax and seeking refund, or you are not paying tax. It depends on which of the two options is the person taking. If they are opting for paying off taxes and then seeking refund, then TDS would get deducted. If they are opting for not pay, for exporting or supplying to an SEZ without any payment of tax, then there would be no requirement of deduction of TDS. Can you explain GST refund rule 89 4A and 4B? Let me please go here.
There is no change as far as the budget 2024 is concerned with reference to 89 4A and 4B. So
yeah, the only change in budget with respect to refund has been that refund has been restricted for those items where there is an export duty payable. That's all.
That's all.
Most of the notices are issued under 74 instead of 73 due to I had explained this in the last presentation also. 74 or 73 is not on the basis of it being time barred. It is on the basis of the specific conditions of willful misstatement or fraud or anything. And there is, in terms of relief, the biggest relief is the inclusion of section 73A, which is now in respect of not having these two different time limits. But so yeah, there is, I'm assuming that this was not an issue at all, so there would not be any relief expected on this. But for taxpayer facilitation, the biggest measure that has come is bringing that common time period for issuance of demand notices. Is an amendment in Rule 88B notified? Rule 88B is with respect to...
It is yet to be notified.
If it's a budget change, then the notification is yet to come. Only those where the recommendations of GST councils could have been done, those notifications have already been notified after the meeting date. The budget parts are, some of the budget notifications are yet to be notified. So 88B amendment falls over there. With
I think no
that,
further questions, ma'am.
yeah, with that, I think we have answered most of the questions. I just wanted to download that weight explanation, but it simply, it has not given any change on it. It is simply stated that less than 25 kg would not be considered as bulk packaging. I just wanted to get that language. If I am able to download, I'll put it. Otherwise, I think all the questions have been answered. The last question that has been put up by CA Sriram, any chances to get refund? I'm sorry, I don't think so. That is not there in the recommendations or in the finance bill. With that, I think Ebenezer ji, we have more or
One
less
more
finished.
question, one we have Aslam.
IGCR benefit for import of lithium iron batteries at 15% instead of 20% under 50 is this extent. There were a few extensions in Customs Act. Give me 1 second. This was actually in my previous presentation and I have not downloaded those notifications. There were a few extensions. 1 second. Ebenezer ji, are you able to download the, are you able to log into the tax information portal by any chance? Not
My
able to
system is
download
very
that.
slow, ma'am. I'm connecting in mobile only,
Yeah,
ma'am. Now.
unfortunately, that's the case here, and I don't have those circulars
Yeah, ma'am.
downloaded. Yeah, 1 second. Mr. Aslam, which circular are you saying is not able to give you clarity? Notification 12 of 2023 customs.
Of 2023, ma'am.
Yeah, I'm just, yeah, I've been able to download the circular. Just give me, yeah, pre-packaged food. So, on the basis of recommendation of GST Council, definition of pre-packaged and labeled in notification 1 of 2017 and 2 of 2017 has been amended. This excludes supply of agricultural farm produce in packages of commodities containing quantity of more than 25 kilogram or 25 liter from the scope of pre-packaged and label. Consequently, supply of agricultural farm produce in packages containing quantity of more than 25 kilogram or more than 25 liter will not attract GST of 5%. I hope it's now clear, Ms. Annapurna. Above 25 kgs, there will not be any GST liability of 5%. Below that, it will be there. So you are right on the question that you had asked at 4:37 p.m. Exemption is only for agricultural farm produce for packaged commodity above 25 kilograms. Let me put this screenshot if I can in the chat. One second. I think I'm not able to put a photo in the chat, but I'll read this out again for you. Supply of agricultural farm produce in packages containing quantity of more than 25 kilogram or 25 liter will not attract GST levy. So less than 25 kilogram will attract GST. Exemption is only for produced farm produce for packaged commodity above 25 kilograms, not less than that. I have asked if it is a branded one. I'm sorry, your question is not very clear. The change in the notification is only with respect to pre-packaged and labeled. Yeah, that concludes the questions in the chat boxes, which were pertaining to the changes in budget 2024. Mr. Ebenezer?
I'm sorry, conclude, ma'am.
Yes.
Okay, ma'am. I hope all your doubts have been clear. Now, before we end this program, it is time to give vote of thanks. I request Sri Babu Ganesh, State General Secretary, ATP Kerala, to kindly propose the vote of thanks. Over to you, Mr. Sri
Thank
Babu
you,
Ganesh.
sir. Thank you, sir.
Yeah.
Good evening, all distinguished guest speakers and my dear friends. As we complete this enlightening seminar, I've been the State General Secretary of Association of Tax Practitioners Kerala. Feel honored and privileged to get the opportunity to express our gratitude to all on this special occasion. The effort taken by the Director General of Taxpayer Service, Bengaluru zonal unit is very much appreciable. I, on behalf of Director General of Taxpayer Service, Bengaluru Zonal Unit, and others who are associated with this, convey our deepest regards and hearty thanks to our distinguished speakers, Sri Manoj Kumar Arora, IRS Chief Commissioner of CGST and Customs, and Sri R. Manohar, IRS Additional Director General of Taxpayer Service, Bengaluru, whose expert analysis was truly enriched our understanding of recent budgetary changes in GST and customs. Your expertise has provided us with valuable perspectives that we'll carry forward. I am also very much thankful to our guest speakers, Sri Unnikrishnan K, Joint Director General, Federation of Indian Export Organization, Southern Region, Sri Ramesh Chandra Lahoti, President, Federation of Karnataka Chambers of Commerce, Industry, Bangalore, Sri Prakash Iyer, Managing Committee Member, Cochin Chamber of Commerce and Industry, Kerala, Sri Munshid Ali, Secretary, Kerala Exports Forum, Sri Girish Narayanan, Honorable Secretary, Bengaluru Customs House Agents Association Limited. My sincere thanks to the masters of this program, the topic speakers, and expert panelists, Sri R. Srivalsan, IRS Assistant Director, and Srimati Rajna R. IRS Joint Director, DGTS, Bengaluru Zonal Unit. I should remember Sri A. Ebenezer, IRS Assistant Commissioner, DGTS, Bengaluru Zonal Unit, and his team, who has worked a lot and followed up to make the webinar a grand success. Thank you very much, sir. We also want to extend our appreciation to the participants who took the time and contribute. Your questions, feedback, and interactions have added depth to our discussions and have been vital in making this seminar a success. Additionally, we thank all partners for their generous support and contributions. Your partnership has been crucial in making this seminar possible, and we value your continued support. Thank you, sir.
Thank you so much, sir. Ma'am, now that Munshid KEF, Kerala Exporters Forum, he joined, ma'am. He wants to say some words about this one, ma'am.
Yes, please, please.
Over to you, Mr. Munshid, sir. Are you on the line now? Hello? We have with us Sri Munshid Ali, Secretary KEF Kerala. I request Sri Munshid Ali to address. Over to you, Mr. Munshid Ali. You unmute your.
Hello.
Yeah, you are
Hello?
audible now. Yeah, you are audible. You are audible.
Actually, I was supposed to get I'm waiting for a lot. Anyway, no problem. See, if at all my video is not available, see, many of members, earlier I told you that this meeting, many of our members is around in and around Wayanad, because we are just 25 kilometers away. Anyhow, we thank you very much for this host of today's event, to inviting me for session. Actually, we have a lot of grievances and conditions which we can share to either to Shasti or the conduct of the session. Thank you very much for inviting me. That's all for my part. Thank you. Thank you very much, sir.
Thank you, sir. Thank you. Now, with the permission of the chair, I declare the session is closed. Thank you, one and all, for your kind presence.
Thank you, sir. Thank you, ma'am.
Thank you.
Yeah, thank you, sir. Jai Hind.
Thank you.
മീറ്റിംഗിൽ കയറി അങ്ങോട്ട് കഴിഞ്ഞ് കസ്റ്റംസ് പിന്നെ അപ്പൊ എത്ര ഉണ്ടാവും നിങ്ങൾ പറഞ്ഞു അല്ലെ? ഇവര് 500 പറഞ്ഞേ, 500 400 എന്താണ്. പക്ഷെ അത് ഈ ഇവിടുന്ന് ഇങ്ങോട്ട് ഇപ്പൊ ഇവിടെ നിന്ന് കഴിഞ്ഞാൽ ഇത് കണ്ടില്ല, കാണൂല. ഒന്ന്. രണ്ടാമത് അന്ന് ഞാൻ വന്നപ്പോ പറഞ്ഞു, ഇതൊക്കെ ഇവിടെ ഇങ്ങനെ ഇരുന്ന് നോക്ക്, അവിടെ ഇരിക്കുന്ന ആളെ കാണൂല. അത് ഒരു ഒന്നെങ്കിലും ഡയസിന്റെ മുകളിലാക്കണം. അങ്ങനെ ഇരുന്ന് കഴിഞ്ഞാല്